We started lower today, but finished today strong. There's a reason why, obviously from a fundamentals, from a news standpoint, why we finished strong. There's also a reason why from a technical standpoint, from a technical analysis standpoint, why we finished strong today as well. I'm going to show you what those charts are telling us and how strong the bullish trend currently is. There's a stock that broke out today out of a triangle that gives us opportunity for good upside moves. I'm going to show you what that is with our trade idea today. So let's go ahead and get started. Today is Wednesday, May the 23rd, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. Thank you very much for watching tonight. Welcome to those of you watching for the first time. Glad you found us. Keep coming back for more. Subscribe to our YouTube channel by mousing over the logo in the bottom right corner of your video and then clicking that red subscribe button. Click the thumbs up icon that's right below the video. That tells me two things. It tells me, number one, that you like the video today. Also tells me, number two, you want me to do the video again. Me or Brandon, you want us to keep doing these videos day after day. It's a one-click easy way to give us feedback there. Comment on anything that stands out to you from today's video. You have to scroll down further. Also, join our Market Outlook daily email list. If you haven't done that already, there's a link in the video description down below that will take you there that I've highlighted here on the video. Follow me on Twitter for more content throughout the day, throughout the week. My handle's up on the screen at DavidSettle42. Like and retweet tonight's Market Outlook tweet. That will tell Twitter you want Twitter, to keep pushing you our content through their platform. Same thing for Facebook. Join our Market Outlook community on Facebook. We're over 1,000 strong there. There's a link down in the bottom in that same video description that will take you there. You can join us there as well. All right, let's take a look at the market forecast for the S&P 500 here. You see we continue to maintain a bullish intermediate posture, a strong bullish intermediate posture according to the intermediate line's position in the upper reversal zone. Momentum line bounced out of the reversal zone again, so another bounce from an intermediate confirmation signal. We've had a couple of these now in the past week or so. The near-term line actually had come back down earlier this morning when I was teaching my class, my options inventory class. The near-term line was back down, but back up because we closed at the high of the day today with a little bit of a rally following the FOMC Minutes. So a good bullish close there. You'll see that when we get to the intraday chart. But still above 50. So now we're at 2 days up above 50. You need to get up above 80 to really kind of solidify and also break through these highs if we're going to solidify a good bullish near-term high point here, coming off of kind of a sideways range that we've had for the past couple of weeks. If you take a look at the Dow Jones, not as bullish. You can see we didn't have quite the rally today in the Dow. The near-term line did pull back from what could be considered a bearish divergence between these much lower peaks on the near-term line compared to slightly higher peak on the Dow itself. So a little bit of a concern. Now, granted, we did the low point between those two peaks, which is right here. We actually did hit on an intraday basis today when we were at our lows of the day before rallying back up and bringing the momentum line from an extreme low point down here. The NASDAQ, which looks a lot better, you can see its ATR was actually bigger than average. The range today was bigger than the average range. Much, much better move. The momentum line spiking up above 90, the near-term line getting up above 50. Not getting above these highs yet, so we're not above 80 yet on the near-term line, but looking more bullish there. And then the Russell, which had dropped more yesterday, did not quite bounce as much. It's got the weakest short-term picture with the near-term line here just still dropping and getting closer to the lower reversal zone. So we've kind of run the gamut from the short-term picture. All of these indexes have strong bullish postures. But from a near-term perspective, the NASDAQ has got the strongest near-term line position, followed by the S&P 500. Then you got the Dow and the Russell, which is two ends of the spectrum there, the Dow being the bigger blue chip index, the Russell being small cap stocks. Both of those are showing the weakest short-term picture. But, we're pulling back This would be a bullish low point if we stayed between 20 and 50. We did get up above 80 here. We didn't spend the 7 days like we like, but at least you spent at least 7 days. 7 to 12 is the range for the blue line to be above 50. So we didn't quite do that. We only spent like 4 days above 50. But it would still be a higher low point. If this ends up being the near-term low, it would be a higher near-term low, and it's about 38% retracement of this near-term rally that we had here. So it's actually a pretty decently bullish pattern that you see from a short-term perspective, despite the fact that it's the weakest out of all of them. You can see, go back to the S&P and really all of them. If I zoom out, you can see they're all up above. You can see how they're all up above rising moving averages, which gives you that green line there on the moving average itself. And of course, the strong bullish posture continues to show that green shading here, which should last 1 to 3 months, probably closer to 2 to 3 months, something like this. Now we might get some weak light pink shading, which would be a weak bearish posture, but the run that it will have above 50, you would expect that it would last 1 to 3 months, closer to the 3-month time frame because of how low market sentiment, which actually is still falling here on a long-term basis. That's on the NASDAQ, and of course here's the same, very similar picture on the S&P 500. Before we look at other technical charts, I wanted to remind you here on the blog, on the Market Scholars blog, where the Market Outlook post is shown. You can watch it here you can watch the YouTube video here embedded in the blog post. While you're here, while you are watching, I want you to do 3 things, 3 clicks that will tell me that you got something out of this video and you want me to keep doing it. And that is like the tweet right here, tonight's Market Outlook tweet, which is embedded right in the post. You can do it right there. You can also like the Facebook post right here too, for those of you who have Facebook accounts. We seem to not get quite as many Facebook likes as we do Twitter likes. But those 2 things, plus liking it here, lets me know that you want me and Brandon to keep doing this video day after day. It's really, really quick and easy to do, like I said, while you're watching. If you haven't signed up for our daily Market Outlook email, you can do it right here too while you're watching in this little form embedded in the post at the bottom. And remember, at the top, right above the video, is a link that will take you to our Market Outlook forums, our message board. If you're not subscribed to the site, you can come up to the top right corner, click on subscribe up there. That will subscribe you to our site, and you can be able to interact with other market scholars in the Market Outlook forum. All right, when you look at the long-term chart, back to the charts here, you can see that we're still above a rising 50-day moving average again. So after the last few weeks, the moving average had been falling, now it's rising, and the 200-day moving average is still rising, has been this whole time. The gap between the two is getting bigger, so the 50-day moving average is rising faster than the 200, which is making that momentum line down here at the bottom, the MACD line, rise. If we take a look at the 3 green arrow charts for the S&P 500, 3 green arrows and a rising moving average. That the 3 green arrows shows up with the strong. When you've got green shading on both the 3 green arrow chart here and the market forecast, and you're above here, you're above the both a rising 50 and 200-day moving average. You really can't have a stronger bullish trend than that. Now, it's not like we're going up gangbusters, but we have a pretty decently strong trend. When you look at the 3 green arrows from a 3-line perspective, you can see how the lines aren't really moving away from each other anymore. The MACD is flattening out, still above its moving average. Stochastic's also still above its moving average in that upper reversal zone. But you can see how we're still testing essentially. On an intraday basis, we came down to the 17-day, but still, we haven't closed below the 8-day moving average yet, as relatively weak as we've been over the past week. So when we look at the intraday chart today on SPY, you see how we had fallen below yesterday's low point, still trading within last week's range, but we were below yesterday's low point earlier this morning. Before the FOMC minutes came out right there, and we popped back up and closed at the high of the day. So nice good rally back up into the middle of yesterday's range. But the low of the day, after gapping down at the beginning of the day, the low of the day was early, the high of the day was late. That's a pretty good bullish pattern there, despite the fact that we had lower highs, lower lows, and we didn't close above yesterday's high. And remember, we haven't really. I mean, that was a slightly higher high Tuesday at the open. Yesterday at the open, that pushed a 4-week high up. But we really haven't created a significant new 4-week high point in about a week and a half now. When you look at we saw how the trading range was below average. Here's the volume, a little bit more volume today, 64 million, but still below average as well. You see how that average, the average volume continues to fall. And so in fact, the volume and let's go out a little bit more so you see some perspective here. The volume and the ATR relative to the price, both are continuing to fall back down to these. I mean, you can see kind of where we're at just over a point. ATR relative, or 1%. You can kind of see, that's how volatile we got during that pullback back in right before the election. We've been less volatile than that throughout all of 2017 until we had this pickup. So we're kind of getting back down to the top end of some normal of the high ranges that we had before, when the ATR is the 1% of the price. We've been, it's not too often that we're above that 1% mark, usually below that. And then you can see how the volume is really starting to taper back down too, and really dropping from, it's more than half of a decline of what the average had jumped up to during this week. And just to kind of give you some perspective, that's not that average itself on a long-term basis. In 2015, 2016, we were actually much higher. So that volume on SPY didn't really get that high. Higher than what we saw in most of 2016 and 17, but not nearly as high as when we had dropped below the 200-day moving averages in both of these instances here. Kind of puts that bearishness into perspective and reminds us that most of that was simply a result of how bullish we were here. See, we weren't so bullish in these areas when we had dropped below the 200-day moving average. Here we had pulled so far up above those moving averages that, as bad as that looks, wasn't nearly as bearish as we were over here when we weren't so bullish. We weren't correcting an overbought condition in either one of these declines here. We had just dropped below significant long-term moving averages and stayed below them. When you look at the VIX, you can see after jumping up today, still below 15, but look how we dropped all the way down to 12.5. So after the FOMC came out, volatility just came out of the market significantly. So big declines on an absolute basis, and then on a relative basis, you can see getting back down to the sweet spot. So there's more declines potentially to come on the VIX, even though we are to that 12.5 mark. That was a really steep drop, and this shows that the market is there's not a lot of volatility. There's not a lot of anxiety over what could come in the market, especially as we're through most of that earnings season. Not a lot of anxiety about potential event risks or anything. With volatility declining to these lows, with more potential declines, according to this chart, to come in volatility. So to summarize, the market posture is bullish. We're not going up every day a ton, but the intermediate trends are there and they're established, and the posture is strongly bullish. The short-term sentiment has been flaky, but still looking positive with how we close the day today. And with volatility dropping as much as it has, and trading ranges dropping and volumes dropping, things are looking. There's a bullish bias to the market. So tell me what you think. Do you agree with that? Do you not agree with that? There's a poll that just popped out in the top right corner. Let me know what you think there. Agree or disagree. If you click on disagree, comment down below. You have to scroll down to the bottom of the page. But let me know what you see. Of course, not everybody's going to be on the same page all the time, but I'd love to hear Love to hear what you have to say. Now, the last time we did this poll, we only got like 40 responses out of like 1,000, almost 1,000 views. So if again, if you don't know how to do that, remember just you can see right here. Click on the eye, and as you scroll down here, there's a link to subscribe to the site. If you haven't done that, there's also a link that will take you to our blog, which is right here. And then here's the poll. So you just scroll down and click on agree or disagree. And of course, if you have any questions or comments, there's a link as well that will take you directly to our Market Outlook forum. Remember, you have to subscribe first to be able to participate in the Market Outlook forum on our site. All right, when we take a look at what's driving the price action today, the biggest mover, we had new home sales out earlier today, and they were still relatively strong, even with rising, really sharply rising mortgage rates since last year. So not as strong as they have been, but still relatively strong on the home sales front. Of course, the petroleum report, you can see how the inventories are way lower than they were in 2017. That's what's pushing prices up, even though they're slowly starting to rise a little bit. And the impact that can have on crude oil, a little bit of a negative impact today on crude oil. But the biggest news was this FOMC minutes and the idea that the Fed is willing to that they're cognizant of the yield curve. They don't want it to flatten out or be inverted, which means they don't want to raise rates on the short end too fast, that they catch up to or pass the long-term rates, which are going to be impacted by economic growth expectations, which are still relatively high. Now this will be updated, here at the end of the week, but still we have relatively high economic growth expectations. And so as long as those hold up steady, then the Fed's okay to let inflation go a little bit beyond that 2% mark, as these commodity prices are kind of reflective of rising prices as a whole with inflation. You can see that with today's action, the Fed kind of damping down interest rate hike expectations. Look what happened to the June meeting. There's still a 90% chance, so still very, very high odds. But look, just yesterday we had a 5% chance of getting a second rate hike by June. Here to 202, or at least to get a 50 basis point hike. Now very, very small, but you get the idea. Well, now we actually swung in the other direction, where there's actually a 10% chance that we hold steady. Now, most likely we're going to raise rates in June. But see, this impacts what happens in September, because look in September now, the odds of only getting that one hike in June and staying there jumped up to over 33%. So the odds of getting that second rate hike in September still relatively high, still above 60, still above 2/3 shot. But that's it was over 80% here just yesterday that we get that second hike. So you see how things can change pretty rapidly, and of course by December, getting that third rate hike, which would be here's where we're currently at. There's one rate hike in June, September, and then December. Look at the odds of that next rate hike in September really dropping down again from about 50% odds of getting a rate hike. A rate hike every quarter this year to now only getting about a 36% chance. So the odds, they've really damped down those rate hike expectations with the FOMC minutes. And they're trying to allow economic growth expectations, trying to allow that long end of the curve to continue to rally up a little. So when you look at the chart here, and you can see right here from the time that the statement came out, you can see how everything jumped up. So emerging markets jumped up. You can see how U.S. stocks jumped up. You can see here's IWM. It jumped up a little bit. Gold even jumped up a little bit. Crude oil jumped up, and the international stocks jumped up and rallied into the close. You can see how the dollar fell from the FOMC. So we were at a gain. We ended up with a small loss on the day. And again, this is from the open of the day, right? And you see the impact and the negative impact of the inventory data on crude oil. This is from the open here. If we were to take a look at if you were to take a look at the, where are we at here? The international, here we go, intermarket analysis is what we want. There we go. You can see here's crude oil pulling back a little bit on a rising trend. See how its intermediate posture is very, very strong. One of the strongest we have on this list. You can see over here the dollar, it would be the other one. So it's pretty rare. One of these is going to give way, either the dollar or crude oil. Today so far, they both fell down for different reasons, right? The FOMC minutes coming down from the high and crude oil those inventories coming in weak. We expect one of those to come down. My guess would be that it would be the dollar, simply because agricultural commodities rising. They've got a ways to go, but they're showing a bullish posture finally. Gold is showing has been so bearish, but it looks like it's found a bottom here. With that strong dollars, put a lot of pressure. And TLT, which is that long-term bond, look at its intermediate posture is very bearish, has been way down. Look what happened to 10-year yields today, dropping as much as they did. But how bullish that they are. They are also showing a strong bullish posture above a rising moving average. But you see TLT, which is longer term bonds. So this will be less impacted by rate hike expectations, more impacted by economic growth expectations. And the bond actually rallied a little bit. This is 20, 30 years where this is the 10-year yield. And that's the difference between the two. But they're still very correlated. And you can see how coming up off of successive low points that kind of correlate to those highs, there's some opportunity for bonds to rally up here, and for yields to fall, and that obviously would have an impact on that there's a correlation there between yields and the dollar. And so that's why I think if whichever one of these two are going to give in, crude or the dollar, I think it's going to be. I think crude might still stagnate a little bit, but I still think that its long-term trend is going to remain intact, whereas the dollar is going to give up some of that strong growth that it's had. That's a very, very good move for a currency in a matter of just a few weeks, about a month or so. Getting a 5% move like that, very, very strong move for a currency. As we look at the sector rotations, you can see kind of across the board, we've only got two that are more bearish than others, even though utilities is bouncing up today along with real estate. You see how these two jumped up the most. Financials were down earlier today. They've been so strong. Utilities have been so weak. These are the opposite ends of the spectrum when it comes to rate expectations. Because when rates go up, interest rates go up, that puts pressure on utilities and benefits financials. And obviously when rates go down, vice versa. Kind of interesting to see the move, both in telecom, utilities, and real estate coming up off those lows. Smaller move in staples, really, really lagging behind here, but again, basing. It's intermediate posture finally rising up above 20. Utilities is rising too, but still below 20. So there's opportunity for some rotation into these areas. Whereas, when we look at everything else across the board here is above 80, above rising moving averages all across the board. So very, very strong move with your safe havens, especially down here. Your safe havens not nearly as bullish. So kind of confirming from a sector standpoint how strongly bullish we are. You can see the areas that didn't, you can see which ones jumped up the most off the lows today. Technology, discretionary, healthcare a little bit. You can also see which ones didn't. Materials and energy, as strongly bullish as they are from an intermediate standpoint, neither one of them bounced up very much, and neither did industrial. So you can kind of see now with a bullish market that these two areas here, technology and discretionary, are showing that persistent relative strength. And energy has been so strong for so long, but getting clusters and you can see not as much strength today on the bounce back would suggest that it might be tiring out a little bit. All right, so for our trade idea of the day, I want to take a look at Netflix. Netflix being a stock that broke out, and a little bit of an ascending triangle here that we've been forming all the way up until today's breakout move. You can see a nice strong move, lots of volume, breaking out above the upper Bollinger Band from a point when from a low contraction area. You can see when you're at a low point and you get a breakout, either one way on the negative side or the other on the positive side, when the line is pulled back, then that opens up the possibility for an extended move to the upside, whether it's that high or even this high. The last one that we had, you can kind of see how that, how we broke out above that, but still hadn't quite broke out. This is a little bit of a different breakout than we do now, where it's a bigger trading range throughout the day and a tighter band than what we had back here when we hadn't contracted nearly as much. So opportunity here for a bullish trade on Netflix. All right, there's multiple ways to trade that. You can buy a call option. You can buy the stock. We're going to go for probabilities here and sell premium, because that's what we like to do. So we'll sell the stock here, sell the put at right around that mid-30s delta, in this case 335, happens to be right around the high point that we just broke out above. So 335, we'll buy the 330 put for a protective move against the downside. We'll go out closer to that 45-day window, so the last weekly option in June for this trade. If you take a look at it on the Analyze tab, decent odds of success, so above 60% odds of success. You set that slice to the chart, and you can see there's my break even. So essentially, it would have to nullify this breakout that we just had of this resistance, and you can see, that's what the Bollinger Bands look like. If you take a look at the three, here you can really see that ascending triangle and the breakout move. Strong bullish posture. And then you take a look at the 3 green arrow chart. We'll take a look at the 3 green arrows here and pull up Netflix on that one. And you can see today's the day we get 3 green arrows with a pretty decent move in volume. If you take a look at the 3 green arrows with the 3 lines here, Netflix, you can see pretty decent, above average volume that we got down there, and of course the breakout, and you can see the MACD's got lots of room to the upside. It's in positive territory, but it's been a lot more positive on these other moves to the upside. So there's opportunity here. Of course, like I said, you can buy calls, you can buy the stock. You can see how strong some of these returns have been year to date, almost 80% return. Remember, the market's not up 80%, not even close to being up that much. 3-month return up 25%. So that's why I'm not as aggressively bullish here, because of how strong this stock has already been. But a good breakout move on a strong ATR gives us that bullish opportunity, and we'll use the short put vertical as our opportunity to make this trade. $1.16 is about the credit to get a 30% return on risk, so we're getting a little bit more return on this. So there's, the stocks are more volatile than the broad market as a whole, so we just need to be aware of the higher volatility the stock has. So rather than position sizing, normally we might position size a bit less, knowing that we're getting more return, but keeping our risk smaller, our portfolio risk smaller, because of how much more volatile the stock is than normal. So let's chat about the trade idea. Let's chat about the market posture, the current market posture that we have. There's a link that just popped out in the top right corner of your screen that takes you to the Market Outlook forums on marketscholars.com. I remember to subscribe on the site, and let's chat about today's video there with each other, with myself, and with each other on what you're seeing and other things you might want to share. Again, thank you very much for watching tonight. Remember, those watching on YouTube, subscribe to our YouTube channel. Like tonight's video by clicking the thumbs up, and comment on anything that stands out to you there. If you're not following me on Twitter, make sure you do that to get more content like this that I put out there throughout the day and throughout the week. And of course, remember remember to join our Facebook community at our Market Outlook Facebook communities. As always, have a great evening, everybody. We'll see you all next time.